Hi everyone and welcome to the first episode of Peer Talk series about investments in InfoSec startups in 2020. I'm Magda Shelley, Managing Director of Responsible Cyber and Chief Information Security Officer on Demand. Today, I have a special guest, Will Lin, partner ForgePoint Capital from the United States. As it will be our first session, we will focus on areas on investment, and this topic seems to be very interesting for a lot of startups and founders. The impact of the current coronavirus crisis on venture capitalist decisions, what do they look for, and in general, what do they look at in a cybersecurity startup, and some practical advice for startups and founders in those hard times who do not hear back as well from investors. Welcome, William. Thank you very much for your time. I'm very happy to have the opportunity today to share your knowledge with our audience.
Thank you for the invite, Magda. I'm really delighted to be your inaugural VC.
You're most welcome. Can you tell us, please, very little bit more about yourself and what do you do for a living?
Yeah, of course. You know, my background's sort of boring. I've been in finance my whole career, invested in a lot of startups, almost 20 at this point in terms of cybersecurity startups as a whole. And the reason why I got into venture and cybersecurity early on was because me and my co-founders at ForgePoint Capital focused on cybersecurity at our prior firm called Trident Capital. And in 2015 decided to start a cybersecurity only venture capital firm. We're currently a team of 9 investors, and we're managing $750 million of funding dedicated towards early stage cybersecurity startups. We've made about 20 security investments thus far, just for some context.
That's amazing, William. I think that's extremely interesting rather than, what you mentioned. I find investment in startups so rich, and especially the fact that you meet so many new founders in new domains around cybersecurity. And that brings me to my first question. This is a new topic for our audience. What are your area of investment in particular? Because we know very well that cybersecurity, information security has multiple domains. So how you as an investor choose your area, or how do you decide that this is my interest in a cybersecurity or InfoSec startup?
Yeah, definitely. It's a really great question, and a question we get asked a good amount. And I think the reality of the matter is security has a very steep learning curve, as you know, and everyone invests in security slightly differently. You know, some people will make 1 security investment per year. Some will make 2 or 3. We as a firm, we make over 5 to 10 investments in security startups per year. And so what that does is it creates a bit more targeted segmentation, a bit very thesis-driven investments on our end. And so in terms of investments of focus in 2020, I can start more high level, but this is still very security specific. And that high level theme is focused on back to the basics. Security as a whole, we've invested in a lot of interesting new spaces that hadn't existed before for the past 5 years or so. And what we're seeing as a firm and what we think about as a firm is that the customers, the CISOs, are going to focus back towards the basics. And so this includes things as simple as, for instance, logging. For a long time now, logging has sort of been critical to get visibility and analytics into what's going on within your company. And we just haven't spent a lot of time thinking about that for a little while now. We haven't spent a lot of time thinking about asset management, around visibility, around things as, such as data security as well. And so we think there's going to be a lot to be done around investing in categories that have already existed in the past, but need to be reshaped for the modern world.
That's definitely a very interesting theme. Again, I mean, back to the basics. I agree that we have been in this kind of interest and focus on buzzwords around cybersecurity, however, forgot, or actually in general, the overall community overlooked the fact that we are missing the fundamentals and the basics. So back to the basics, I really like the theme, and I think it's It will speak to many cybersecurity professionals in general. So now
Thank
that
you.
we understand your areas of investment, so how do you choose your startup? So how do the startups choose you? How that does work?
Yeah, that's a really fun question. And so this is something I've said in before, which is investing in a company is a lot like getting married to the company and to the
I
board
love it. I
members and to the
love
executives.
it.
Yeah, I mean, we're really going through all the ups and downs. And the only difference between here and getting married is that you can't get divorced when you invest in a startup. And so you really have to, make sure that you're getting married to people that you enjoy working with, people that you think are really smart and can accomplish great things. And so, when it comes to that theme initially, or that thought process initially, then it makes it very clear that the team is incredibly important. And the earlier the stage the company is, the more critical the team is. As an investor, we meet so many people, right? Over 1,000 pitches a year. Um, and we get to know what type of people we like working with. We get to know we get to do pattern matching across our portfolio of winners and companies that could have done better, and sort of get to basically understand what are these criteria or patterns or signals that make it easier to work with this team. And we learn a lot about ourselves as well in terms of what type of people we work better with versus others. Um, and so the team, I think, is the most important criteria, at least in my mind. Then the second one that's also incredibly important is the market. If you have the most amazing team ever, but they're tackling a really small niche problem that a lot of people don't have budget for, they can take that market and make it amazing, but definitely not enough to make it a IPO or a very large, billion-dollar outcome. Perhaps it's $100-200 million outcome. And it just, in those types of situations, it just doesn't feel like a great use of that amazing team's time. And so we find an amazing team tackling a great market. That's when we get super excited. And then the third one is really focused around, and I like to call this empathy, but other people call it product market fit. Some people talk about it as differentiation. And so there's a lot of different ways of describing this third theme. But what it basically amounts to is a focus around, how good can you solve your customer's problem? How well can you solve your customer's problems? And as your customer's problems evolve, how do you evolve to fit them? And very most likely, as a startup, you're not solving 100% of your customer's problems in the specific use case that they are asking you to help solve. And so how well are you defining and evolving your roadmap over time as well to fit your customers' problems? And how well are you messaging that, describing that, communicating that back to your customers as well? Because as you know, everyone's so incredibly busy. The better you are at being able to understand, describe, and solve the problem, the more likely you will be to be successful.
That's very interesting, especially for me as well, because I am an owner of a startup. And then it brings me to one question from your first pillar, or first point. What do you consider as a winning pattern? Or what are the criteria where you see immediately that those founders will be the next, founders of that unicorn?
Yeah, and I think there's a lot of different evolutions of founders as well. And so there are the multi-time entrepreneurs, they're the first-time entrepreneurs. And when you look at the data, there are multiple examples of billion-dollar, very successful outcomes from entrepreneurs in both the first-time entrepreneur and the multi-time entrepreneur front. And so it's not limited to the amount of experience that you have in startups or running businesses in general. But what happens is when you're earlier in your startup career and experience managing startups. What we look a lot for, or what I look a lot for, is people that are very curious, they're constant learners, and they're really good at finding mentors to ask for help. They're really likable. People really tend to want to help them as well. And as you know, finding mentors, people who have incredible experience, they can help you shortcut months, weeks of grinding, of frustration with some wisdom. And so these types of folks, understand the value of wisdom, understand the value of learning, and tend to do well long term as a result of it. The folks who are multi-time entrepreneurs, they've learned quite a bit, and they know they have successes, they have failures, they know what they want to do, they know what they don't want to do. And so when it comes to that scenario, it's more about thinking about how flexible are they to learn more. If they're steadfast and say, hey, I don't want to consider anything because I've had a negative experience here, I don't want to do that ever again. And they're ignoring the data that supports potentially considering that decision, and that's a slight negative as well. And so you don't want someone who is biased towards not doing something while they're ignoring the data supporting it.
Okay, so I recall now, and I will remember definitely that, you mentioned the curiosity, likability, but in particular, the focus on the mentors. I think having a mentor, even in a professional career, without having a startup is very important and can help the individuals increase their capabilities, gain months of frustration, like you said. Instead of searching for how to evolve, they can just ask for advice. And as part of the Women of Security initiatives, this is something that I repeat myself, that it can be the best way to evolve as an individual, professionally, personally. So thank you for those advices and recommendations. I'm sure they're very valuable for our listeners. Then you mentioned, of course, the market and the product market fit. And we had a discussion before this this talk, where we had, the introductory call. We had a very interesting discussion. And to be honest with you, I went and I re-looked at what we are doing as a startup, for the only reason that I found your feedback in general around startups and the market fit very, very interesting. And the back to the basics again means that sometimes when startups come into a market that seems very hype, we're talking about cybersecurity, everyone wants to do artificial intelligence in security, etc., change the word, blah, blah, blah. But they sometimes forget one essential thing. You need to solve a problem for your customers. If you don't do that, you don't have a real business. At least that's from my point of view. Invisibly, we're talking about the same. So very important fundamental questions for every founder. What problem are you solving? And how can you ensure that you have potential customers that will actually buy from you because you're adding value and you're changing something? So again, I'm sure that a lot of founders or entrepreneurs that are thinking about starting an idea and startup will find this very useful and make them think a little bit more about going back to the right basics and fundamentals when they start building their company. So as you know, nowadays we're going through a very particular period around the economical impact is one thing, but we're having important health crisis at the moment. And this health crisis is bringing also a lot of struggle, not only for the general economy, but in particular for startups who, for example, they might have started something just 1 year ago or several months ago. They didn't even have the time to get any funding, and they just started in the building the product that they want to sell. And now they find themselves in those hard times. How does it work for you as an investor, and how do you react to economical crisis towards the potential leads that you had already in your pipeline? And what would you suggest to those startups to do?
Yeah, yeah. So let me start with what do I suggest to startups, and especially because this is advice that we're sharing with our portfolio companies as well. Um, and so the first one is a general focus towards being a going concern company. So having the cash that you need um, to uh, to last through the year. We don't know how long this health crisis will be. Very likely it's a couple of months, and the second half of 2020 might be better. But when we think about how long sales cycles are in security, especially in enterprise, there's a very real possibility that every budget that everyone thought they were going to be able to achieve in 2020 is lower by a significant percentage amount. And so when considering that possibility, that also means that we should, on the top line, that also means we should be focused on what happens on the bottom line as well. We don't want to be burning more cash than we expected and reducing our runway more than we expected as well. And so typically when companies fundraise, they fundraise with the expectation of being able to last 1.5 years to 2 years. And so if the health crisis is shortening your time frame from 2 years to 1 year, that's something that you have to really consider very strongly. And that's something that we're providing an alternative opinion on as well. We believe that a company that we thought was going to fundraise a year from now is probably going to need to fundraise 6 months from now. We're already jumping in to see if we can help them with that process and figure out sort of next steps. With regards to companies in the pipeline, that one is a bit tougher in terms of answering. Yeah, I think a lot of VCs are in the wait period. They're thinking, hey, why don't we wait for a month or two, let things settle out. Most typically companies, shouldn't allow themselves to fundraise, when they only have 1 or 2 months of runway. And so that should be okay to take a 1 to 2 month break. What I'll say is that we're still actively looking at investments, and I think the only difference now is that we're just have the lens of a potential less than stellar 2020 on behalf of most companies, which we think is a reasonable assumption to be making.
Okay, that is definitely positive for whoever is willing to start or was already starting the fundraising, especially around the world, because even if Asia Pacific and especially Singapore is really a very vibrant place with a lot of accelerators, startup growing, especially in cybersecurity, fintech, nonetheless, I would say that as per my experience, the investment fundraising actually from those startups are all over the world. So listening to your comment and feedback is actually really important. Well, I would like also to come back to this whole impact as well, because again, if we're talking about founders of startups and people that are in the particular point of investment. I had a discussion nowadays with a group of startups, and they all actually bringing up situations where they experience really important slowdowns, deals being broken, contract affected, delayed, because just the clients are freezing the contracts, they're freezing the hiring, so they don't want to take any decision, basically, like you said, waiting 1 or 2 months. But again, we mentioned the sales cycle of cybersecurity. So how is your actually, I would say, evaluation criteria towards startups that had a certain, pipeline and goals, objectives for 2020, knowing that they might be hit really hard within this crisis? How do you take it?
Yeah, and this one is more one of the where it's more art than science. I think it's seeing enough pipelines, having enough conversations with customers and sales leaders. It's generally possible to have a sense of what the range might end up looking like. After pattern matching a little bit. So it's a little bit hard to give a hard and fast rule in terms of how to view 2020 budgets. And there's just a lot of human judgment in there as well. For instance, pipelines, every sales leader judges and builds their pipeline very differently as well. So it's very hard to say to give very concrete, like numerical guidance here. What I can say though is, Q1, we think that one is, we're already in Q1 right now. And so the hit in Q1, we don't see it to be incredibly dramatic, especially if you're a recurring sales company. Typically Q1 is a lighter quarter anyway, unless it includes a lot of Q4 deals that have moved over to Q1. And so we, in general, don't think Q1 is going to be affected dramatically. Q2 will probably be impacted dramatically, and then we think that Q3 and Q4 will still see impact, but overall, potentially closer in line to what Q3 and Q4 showed. It's hard to tell though, and I think that's the uncertainty, that's the risk that that people frankly have to sign up for if they want to raise money or invest in companies during this uncertain time.
Yeah, absolutely, William. I think there was one point that probably every single founder listening to this talk will have in mind. This is an amazing person who actually has the human aspect and the mentorship again. I really appreciate all the feedback and recommendations, William. Again, as a founder of a startup, there is a lot of misconception or just perception that, you guys are not approachable and you take a certain level of assessment of startup that is very much based on just an assessment, Excel file or something like that. But I hope that through this discussion, people will realize that they are, again, people on the other side that actually care about their startups, that they want to mentor them, that they want them to succeed. And one, again, important point here is that you focus on the team and on the people. So you really, this is for you very important. I think, again, it's bringing hope to the future entrepreneurs and the founders of the next unicorn that hopefully you will invest in, right?
Exactly. Yeah. Delighted to be a guest.
Thank you so much, William. So I think we are running out of time. So I am sure you're very, very busy. Again, thank you so much for giving, this time to us and being able to answer all my questions. It has been a pleasure and a very interesting discussion. I hope we can do this again on a different topic, of course, if you have time, and therefore we will be able to help additional startups, to pave their path towards the next level of funding. William, thank you so much again, and I hope we will have the opportunity to discuss again.
Thank you for having me.